Yes, you've got bad lows down here. Yes, it's not a convincing low, but without the energy into that zone, we're not expecting a continuation. That's important. So, we are now starting on a movement up. This is not massively dissimilar to oil when we traded on the 2nd to the 5th of May. Very similar movement to the way oil traded when it was trading around about $18 before the next step up. So what we're now looking for is the possibility that on a break of these recent highs, remember we've been up here a couple of times now, up towards 32.21 a few weeks ago. In fact, at the beginning of June on the last Fed, we've been up towards 26, we've pushed on towards 29. This is now the zone to break. If we get above here and we get some more sustained buying, it's hard to be looking for anything other than record highs. I think you've got 80s above there as a gap to trade towards, but other than that, not a great deal else. So the key bit today for the S&P was this complete lack of energy down here. That was the bit that mattered. With that lack of energy, we were always on that possibility of a drift back towards the upside. Onwards to Euro. Now, play of the week, as I showed you on the daily, was to try and get up through 115 this morning. And it looked good for it. We took out these highs around about 1460, 1455. It looked good. We put in a poor high on the day, up at 81. More reason to think that we're going higher. You're expecting a pullback and play for that break. Doesn't happen. We then see a washout of longs, which I'll show you in a moment in top trades, and back down to our line in the sand, which comes in, oops, not at 1455, at around about 1425 down to 15. These single prints, but it's not just single prints, you can see where we found support, we found resistance. It's kind of a pivot mid-range. This is where you'd want to see the buying come back in. As long as it maintains above here, we've now still got this poor high, that's giving us scope to go higher. So the trade's there, the opportunity's on, it's just it's not come yet today. Back up above 60, and we've now got a small range to trade through to give us the move towards the upside. But so far, the trade's not quite there. It showed signs, it gave you the chance today, and it's not completed the move. This doesn't mean the move's dead, it just means today was not the day for it. And unfortunately, likely means that people would have got stopped out on this. So, what happened? This is what I call a positioning liquidation trade. We've got this poor high. What are people going to try and do? Well, we've already got a bullish market. People want to see that high break. So, people are going to try and position themselves for it. They're going to get long somewhere in this range. So, all good. They're long in that range. They're looking for the break of highs. We fall down the range and fall into this little zone here. This is creating a bit of pressure just above the level, which comes in at 1454. You can see it just here. This has been reset as you go into the afternoon session, hence why you don't see any further prices below there. But we have traded below there in the afternoons, in the morning session. Target-wise on this, you're going to be looking this liquidation move up, so 42 to 45 initially. And what we're playing for here is that if everyone's playing for the break higher, they've all got to find a point to give up. Those previous daily highs all came in at around 60, 55 area. We've now found support there multiple times. This is the point that matters. So if you start to see pressure building on this level, this is where we can get the breakdown. So we're starting to do 600 lots just above the level. What we're looking for now is if we see a push through, that's your chance to get short. So you see, can't get away from the level now. We just trade into 55 and we can't get away from the level. So now imagine if you're long here, you're going to be getting quite nervous. You're going to be thinking, if this trade's below 53, I don't want to be in this trade anymore, which gives the opportunity for this liquidation move. So you can see once again, very limited willingness to buy here. trading 53. So you are getting some buying, just accepting getting filled at 54.5. There we go, 60 lots now trades up, and straight away offers come in. Now got 100 lots, boom, there's the quick sell. That's showing you now the liquidation moves on. Could just be a few people giving up. We could see a further continuation of the move, but that's now giving you all the information you need. Now we're looking for this move down. Difficult one to get in, and the skill of getting in this is more about recognizing that it has no interest in bidding up off the level. You're expecting those lows to break. Once broken, we've seen that initial liquidation. This is your stop type move. Got another 100 lot coming in. Volume starting to build down at lows. Now, if you want to sell more, you've got 48, 49 as an area to want to sell. So that's now your next area to want to sell. You've got 100 lot, which can give you a little bit of protection there as well. So you've got a chance to add to this trade. Remember, target, you're still looking down here, and potentially lower as well. Realistically, we could be going down towards 25, which is where we eventually get down to. The key bit to this was that recognition that you didn't have any willingness to buy up here, where we were sort of pressuring on the level. As soon as it ticks through, you saw that instant drop. That was your first stop out. Then what we start to see here is then an accumulation of volume in this zone. The more and more that trades here, the more and more you can look to trade, you can look to get positions filled there. That low volume becomes even more prominent, which then further serves the purpose of indicating a continuation down. After that, it's just a case of then keeping in mind your target. Target's down towards 42 as a minimum, and then further on down towards 25 area for those single prints. But the key bit to this trade is the understanding of people positioning here, and then the recognition that they are likely to stop out as soon as it breaks through 54. And as soon as you got that last buying at 54 where someone absorbed 60, no one bought, bang, that was the chance to drop. So something to watch out for in the future. It's all down to positioning. You know that this could happen. When you get that situation, there's your chance to sell. That 100 lot clearly is chasing down to try and get filled and is not allowing any more buying. You're not seeing a great deal of buying here either. So you're now looking, consolidate here, move continues as we see just there. That's the idea of a liquidation of positioning. So people get long, they don't get the move they're after, they get out of the trade.